Hello everybody, what's going on? So when you look at the automotive landscape right now, a massive structural divide is opening up. The 2026 Gartner Digital Automaker Index just dropped.
And it confirmed what forward looking tech and auto investors have been suspecting for years. Legacy automakers aren't just losing around, they are being completely left behind in the software and the AI revolution. Today, we are diving deep into Gartner's latest evaluation. We will look at why Tesla and key Chinese players are dominating the chart, why legacy giants like Volkswagen, BMW, and Mercedes Benz are tumbling down the ranking, and most importantly, why this report presents a massive fundamentally sound bullish thesis for NIO stock. Because this is the new reality of the automotive industry. For the second consecutive year, Tesla and Ford Chinese brand locked down the top 5 spots in the Gartner's ranking. Tesla at number 1. At number 2, we have NIO. Then Xiaomi, Xpeng, Li Auto. Then at 11th position, we have Mercedes Benz. Then Volkswagen at 16th position. Looking down the rest of top 10, Rivian landed at 6th with 55%, followed by Lucid at 45.3%, BYD at 43.6%, Geely 41, and Hyundai Kia barely holding on to the 10th place with 37.5%. Gartner called these findings a wake up call for traditional OEMs. Despite dropping billions upon billions into the tech transformation, not a single legacy automaker managed to crack the top 3 in any of the Gartner's 9 individual scoring category. Furthermore, not a single European manufacturer even made the top 10 overall. So, why this is happening? You have to understand how Gartner updated its methodology for 2026. They explicitly raised the bar in two critical ways. First, AI as a dedicated category. Gartner introduced artificial intelligence as its own standalone scoring category, recognizing that AI is not the primary competitive battleground for future vehicles. Second, depth of deployment over single flagship. Gartner eliminated binary checks. In past years, if an automaker had 5G capabilities for over the air updates on a single flagship concept car, they got the check mark. In 2026, Gartner evaluated how broadly that technology is actually deployed across entire commercial fleet. That shift completely destroyed the illusion of tech competence for traditional automakers. Take BMWs for example. BMW rolled out its much hyped new Class A platform, a dedicated 800-volt EV platform with a redesigned digital cockpit. Yet BMW still fell a spot in the index to 14th place. Why? Because having advanced software on a showcase vehicle means nothing if 85% of cars roll off your assembly lines are still running on fragmented legacy electronic architecture. Gartner's VP of Research, Pedro Pacheco, pointed out a critical distinction. If you buy off the self software from third party vendor, your competitors can do the exact same thing. True competitive differentiation and valuation multiple comes with it only belong to the companies building proprietary tech in-house. That brings us directly to NIO, which secured the second spot globally with an impressive score of 73.1%. NIO beat out major tech giants like Xiaomi, dedicated EV pioneer like Xpeng and Li Auto, and crushed every single legacy automaker on earth by an overwhelming margin. Mercedes-Benz trails NIO by 37% points. Volkswagen sit more than 43 points behind. So how is NIO pulling this off? It all comes down to horizontal integrated and proprietary architecture. NIO operates its Sky OS, a full vehicle AI oriented operating system. SkyOS isn't just an information system, it acts as unified digital brain that seamlessly integrates vehicle control and dynamics, autonomous driving subsystem, digital services, and cloud connectivity cockpit experience. Also, it manages energy management and power swap networks. More importantly, under Gartner's new strict rule requiring mass fleet deployment, SkyOS isn't isolated to 100,000 executive sedans. NIO deployed SkyOS natively across its entire product lineup, including its mass market sub-brand Onvo and the Firefly. While the legacy automakers struggle to push basic over-the-air firmware updates to older models without breaking control molecules, NIO is orchestrating an entire multi-brand ecosystem on single clean software stack. Wall Street and institutional investors historically treat automotive companies as hardware manufacturers, valuing them on cyclical low single digit P multiple or fraction of revenue multiples. But 2026 Gartner report proves that this framework is completely broken. Automakers are splitting into two distinct asset classes: low margin hardware assemblers relying on third party suppliers facing chronic tech obsolescence. Second, high margin AI and software platform owners capable of monetizing their fleet across its operational life cycle. NIO is firmly anchored in that second category. Look at what NIO has quietly built while mainstream headline focused purely on short term delivery numbers. First, they have developed their in house chip and silicon. NIO designed its own autonomous driving chip, such as Senzi NX9031, dramatically lowering bill of material cost while maximizing operational efficiency for AI models. Second thing, take autonomous driving. NIO's continuous execution on the end to end AI models for urban and highway navigation put them an elite company alongside Tesla. Then we got the energy network integration. NIO's battery swap architecture isn't just a hardware convenience for drivers. It functions as a digital grid connected power ecosystem managed by predictive AI algorithm. When a company secured top 2 ranking globally in culture and leadership, connected vehicle and tech experience, it proves that management's multi-year investment in R&D are delivering real structural advantage. As the gap between pure digital natives and legacy manufacturers widens into chasm, legacy OEMs are going to hit a wall. They will realize they cannot build the software in-house fast enough. What happens then? Licensing deal, joint ventures and strategic technology partnership. We are already seeing European legacy brands turn to Chinese EV platform to stay relevant in key markets. NIO isn't just selling premium electric cars. They have built a scalable full stack AI and software architecture capable of powering millions of vehicles across multiple tiered segments. Short term market sentiment around Chinese equities and EV price war often creates noise, but savvy long term investors focus on fundamental technological moat. Gartner's 2026 index confirms that neo-technology moat is real, validated, and expanding. That is the reason why I would say that NEO has successfully navigated the hardest part of the curve, building a unified operating system, scaling and proprietary energy infrastructure, and integrating AI into every level of vehicle experience. As fleet volume expands through main sales and sub-brand scaling with Onvo and the Firefly, the leverage on their R&D investment will start following directly to the bottom line. Tesla and NIO are setting the standards for what an automotive company must look like in the late 2020s and beyond. For investors looking for a high conviction tech driven play in the global EV market, NIO's positioning at the top of the digital food chain makes it one of the most compelling risk reward opportunities on the board today. So prepare now. With that said, thank you so much for being here. See you in next one.